Should we get to the bond market just quickly? How significant is it to break out of that post-election range and print a new high, Lisa?
I think that it does matter because people are saying that this is a particular level, that 2.63% is a technical level to break out of. I think that the idea here is, the key issue to me is, in a time of uncertainty, are investors still willing to pile back in U.S. Treasuries, sending yields lower, prices higher, even with the expanding deficit, even with the faster growth expectations? And if that trend continues, that creates some real questions about how high Treasury yields can go.
For anyone that's interested in the stats, it could be the first January losses for Treasuries since 2013. I mean, it's been quite a while, Cameron. I'm just wondering whether it's significant or not.
Well, I think it is, because it speaks to, as you said, I mean, we joke about the IMF upgrading global growth forecasts, but there is a sense that things are better than they've been in a long time. You've got the fiscal tailwind here in the U.S., you've got the cyclical tailwind in the rest of the world, you've actually even got a base effect in terms of the cell phone data plan stuff falling out of the inflation numbers in March, so you should see, all those being equal, an uptick in U.S. inflation. You've got oil prices at the highest point in the last couple of years. So, I mean, tell me where it says that there's a problem here.
Well, I'm trying to understand if Treasuries can sell off in a vacuum. Bonds have repriced as well, but the ECB's not exactly about to hike rates anytime soon. It could be a back end of this year's story, but it's not going to happen like that. There's going to be a very slow, prolonged lead up. Can you get a Treasury sell-off, Lisa, without a significant repricing in bonds?
Only if the dollar weakens a lot. Right? I mean, because if the dollar weakens a lot, then you have foreign investors who don't see the opportunity, don't actually think that they can capture any extra yield by coming to the U.S. If they hedge, the hedges are getting more expensive, the currency hedges, and then otherwise they're getting losses on the dollar, but they might be getting, that just simply offsets the extra yield that they're getting on the Treasury. So, I mean, I think that that's the question is, can this continue? Yes, but only if the dollar reprices much lower.